Good morning, traders. Welcome to this Phoenix Blue market update on Friday, September the 8th. There's been quite a lot of movement in the Asia session, so let's get straight over and have a look at the data coming out today. Let's see if there's anything that we think could move the markets further. Okay, so we've got some data coming out this morning, pound manufacturing and production data. Don't expect too much influence on sterling when that data comes out. One thing to note, we can see 9:30 Governor Lowe, Bank of Australia, is talking. I'm not sure in what capacity or where, but just be aware if he drops any kind of monetary policy hints that could influence the Aussie dollar. Also at 9:30, consumer inflation expectations on sterling. Again, don't expect any change to that 2.8%. And then moving into this afternoon, we've got the unemployment rate for the Canadian dollar. Previously 6.3%, and they're expecting that to come in the same. So keep your eye on that, guys. So as I mentioned, there's been a busy session in Asia overnight. Dollar has tumbled further and the yen and euro have rallied. Now there's a few different factors as to why the dollar's falling. It's actually fallen to its weakest level since 2015, and a lot of that is due to fading expectations of a US interest rate this year. Obviously North Korea tensions are continuing, and obviously now we've got this historically powerful hurricane, which are all factors that are unsettling investors. So let's move over to the charts and just see exactly what's happening. Okay, first place to start, let's look at the dollar index. Now, I've marked these pink zones on here, which is areas of major support. This is the weekly chart we're looking at. So these are areas of major support on the weekly chart, and they're ranging from around 95 down to this 92 area, which is this bottom here. Now we can see that was the final leg of support that we can see on this chart. So we can see this weekly candle at the moment is looking very bearish, and it has broken through this support. Now we need to watch this now, see if this is going to be a false break or whether this is going to recover and stay above this 91 or kind of 92 area. So one to watch. Just want to show you this next chart. This is just the dollar index in blue and the euro in red. Now for those of you that don't know, the dollar index is made up of a handful of currencies but is heavily weighted to the euro. So and they've got negative correlation. So if the euro is going up, then the dollar index is going down. We can see that here. So the euro is in red. So we can see that's been on the march upwards whilst the dollar index has been falling. So let's just have a look now at the euro chart in a bit more detail so we can see what's been happening in the last couple of days. Alright, so this is the weekly chart. Just zoom in a little bit. So I had this blue zone here marked, which is around the 118s, which was major resistance back from 2015. And we can see clearly the last few weeks it's broken through that. Again, we've got this 200 moving average on the weekly. It's broken through that. And you can see we've got clear air here now. This could go, I've got this level marked up here, 123.87, which I think is a monthly level, which I've got marked back here. So the euro is really looking strong. So yesterday's ECB took this straight through that 120 barrier. We see it did pull back to that 120 area before moving to the upside again. So the bias here has to be to the upside, one to keep your eye on. Another currency which is booming at the moment is the Aussie dollar. Again, on the weekly chart here, these blue weekly resistance levels marked, and we can see again this weekly candle has broken through that area of resistance. Again, we've got another weekly 200 moving average which it's come through, and I suspect will now be acting as an area of support. Now guys, look to trade potentially long from the 8,000 area, but again, this Friday I suggest let the markets play out and wait for setups next week. So this is the dollar yen chart. This is the risk chart, and we can see price is now 107.74. So it's taken a big strengthen of the yen overnight in the Asia session. I was looking to see if this 108.20 support area that I've got marked to this blue line was going to hold. This is another chart. We can see that this major area of support has now broken. So we'll be looking for retracements now to get down to the short side. This is another chart though, you can see there's not much support too close. So we've got this top over here, which price is getting very close to, so we might see a reaction here. But there's lots of space, lots of room for this one to move. So watch very closely. This is dollar CAD, guys, on the weekly chart. It tells the same story as the Aussie, as the Euro. It's broken out of major support areas. This blue zone I've got marked here at around 124.50. You can see it also again 200 moving average has been broken. So guys, we need to be mindful of these. These could be a change of trend. Obviously we can see clearly these have been in an uptrend. The moving averages are pointing that way in an uptrend. Could we now be seeing a downturn and a trend reversal? So these are all things we need to be aware of. Now obviously there's a lot more downside needs to happen before we see a reversal of trend, but this low has been broken now, so it has created a lower low. So we could be seeing the beginning of a trend reversal, and we could be seeing a lot more downside. So these are all things to be thinking about on all these charts: Euro, Aussie, Canadian, yen. So just be aware we could now be seeing a shift in sentiment, and these could all be major reversals. Okay, we'll leave it there for today. Hope you've had a good week. Any questions, you can catch us at info@phoenixblue.co.uk. Please feel free to join our free Telegram channel where we post lots of insight charts that we're looking at, and from time to time we do give you free trades as well. Anyway, have a great weekend, and we will see you next week. Bye bye.